For more on this, we're now being joined by Monika Halan, author of Let's Talk Money live from Delhi. Thank you so much for joining us on the show.
Thank you.
Now, global investors have pumped in close to $20 billion into Indian equities in 2023. What are the factors that make Indian markets attractive for them?
I think we need to take a longer look at what is working for India right now. We, within India, might not have realized it, but definitely for the foreign institutional investors and other investors, they are seeing the fact that India has got its ducks in a row after many, many decades. We've got the India growth story going. The reforms have really taken time to fructify, but we are seeing the result of the reform, second generation reforms, which began about 8 to 9 years ago, which are coming to fruition now. So the GST, the bankruptcy code, the solving of the twin balance sheet problems of banks with bad loans and companies who couldn't pay it back. So the banking sector is very strong. It's one of the strongest in the world right now. And to add to that, we have a demography where the dependency ratio is 48. You have dependency ratio in countries like the US, which is much higher. Japan, it's in the 70s, which means what proportion of young people are there who will support the older population. So India has got many, many things going for it. We have also solved the problem of abject poverty. So absolute poverty of less than $2 per day per capita is down to single digits from almost 50 to 60% just 30 to 40 years ago. So you've got growing, finally, a very strong middle class. You've got reforms which are translating into growth. So we're looking at growth of about 7.5% at a time when the major mature economies of the world are in a recession or on the brink of one. Right? So India is a lighthouse in this tempest. We are at a place where we have the maturity in the markets to attract these flows. Plus, we must not forget that there is a base provided by the Indian retail investors, which prevents the market from yo-yoing because of foreign investors coming in and out. When you stitch the whole story together, it might sound like a cliche, but it is India's time. We are growing. We are in a multi-decadal structural growth story. And we just need to internalize that fact. We need to know that it is actually happening.
Right. On that note, in fact, I want to understand, what's your assessment? Do you think foreign investors will continue increasing exposure to Indian equities in 2024 as well?
See, money only wants to make more money. So if the investors are coming in, they're definitely looking at a story. And this sudden rush of foreign investor money has come in because of the Fed announcing rate cuts in 2024. Now, if those rate cuts don't happen and the US Treasury is able to give a better risk-free return, then some of this money can go away. Okay, so we must understand that there's no emotion attached to money coming in and out. Money is looking for a return. It is going to go to the place where it anticipates a certain amount of return. If the US Treasury is giving risk-free return, why will it come outside? On the anticipation of rate cuts, this money has begun to come in. That is one. Two, it is seeing strengthening of the Indian economy. Therefore, these flows might go up and down a bit, but the long-term direction, we should be clear, is that India is one of the main destinations for risk money across the world now. So I anticipate this flows to keep coming. You should not look at short-term volatility. You should look at the broad direction at which we are going. I don't see a pause in these flows. You might see variations month on month, but the broad direction is that the money will continue to come.
All right. Now, just for better understanding here, what's your prediction for Nifty 50 and Sensex at the end of 2024?
If I knew, if somebody could predict that, then they would be extremely super rich. I don't want to predict index levels, but let me give you a formula of how some of us think about markets. We take the GDP number, we add inflation to it. So if GDP is 7.5, you add 5 to 6% inflation. That is 12, 13% is the growth of the index in the year. All right, so you need to look at the growth in the economy, which becomes the basis for growth in the markets. So I don't dare to predict index numbers, but on a long-term basis, if I take a 5 to 7 year horizon, then I'm confident to say that our market should do between 12 to 14% year on year. That is a reasonable prediction to make.
All right. Ms. Halan, thank you so much for joining us on the show with your perspective on this.
Thanks so much.
WION is now available in your country. Download the app now. Get all the news on the move.